I asked the question whether a compulsory listing could be regarded as a form of expropriation.
Recently, the Capital Market Solicitors Association of Nigeria, CMSA, held an evaluation forum on the listing reforms at the Nigerian Stock Exchange.
If it is compulsory, I fear for the image and the perception that it causes, because it's very important that people must know the rules when they're coming to do business.
High points of the meeting was the necessitated listing of the major oil and gas companies and telecommunications firms in the country.
Just looking at the sectoral profile of the oil and gas sector, it provides, from last year, it provided 79% of Nigeria's revenue. This is quite significant, and it continues to be the main contributor to the foreign reserve of the country. So, in terms of GDP contribution, it's quite significant. Unfortunately, very little of that is in the capital market. Another sector to also look at is the telecoms. Telecoms is the fastest growing sector. I mean, right from 2001 when it was first privatized, growth was over 1,056%. And it's grown the last 10 years at a compounded growth rate of about 36%. We're above the compounded growth rate of the country, which is somewhere around 8%. Yet, very little of this is represented in the stock market.
The Capital Market Committee Chairman, Hembe Hemen, gave clarification on the description of the listing of the targeted companies.
The use of the word compulsory, which has been making around, is not a very good thing. The use of that word to describe the approach and vision, it did not emanate from us in the National Assembly. We are all too conscious of the need to combine an enabling environment for business to thrive, and would rather work towards a situation where a combination of incentives and regulation is deployed to achieve our aim. To engender a willingness to participate, we should provide legislation that covers incentives, unbundling of stringent eligibility requirements that could create high barriers for potential entrants and hinder participation by willing businesses, and the adoption of options that promote foreign investment in our economy under terms that support our national interest without exposing the market to the dangers of the past economy. The House of Representatives Committee on Capital Markets and Institutions intends to work closely with the Nigerian Stock Exchange, the SEC, Ministry of Trade and Commerce, and the Ministry of Finance, and all other stakeholders on providing fiscal and legislative backing for a clear and unambiguous set of rules that local and foreign players can relate to, using best practice benchmarks.
Addressing the case of liquidity in the system, the CEO of the Nigerian Bourse, Onyema, gave illumination into the matter.
The question of liquidity is that of a chicken and egg situation. People say we wait for your market to be liquid before we come and list on your market. But your market cannot be liquid if you don't list. Okay? I want to just share some numbers with you. In Nigeria, the pension fund PFAs, the pension fund administrators, I think the assets under management as an industry is 2.6 trillion naira. 25% of that, under the rules or the guidelines, PENCOM guidelines, can be allocated to equities. Another 30% can be allocated to fixed income, and then the rest can go to money market and the like. If you do the math, that's a lot of money, just from our local institutional investors. And this does not include insurance companies. This is just the PFAs. I don't buy the argument about the market not being able to absorb a good company. A good company is a good company is a good company. It doesn't matter whether it is being listed on the Nigerian Stock Exchange or the New York Stock Exchange. The story will sell and people will oversubscribe. The problem is we don't have the good companies. We have a number of good companies and they're doing well. Okay, if you look at Guinness, Nestle, Dangote Cement, they're doing relatively well. So the important thing is let's get the good quality companies to come and list, whether by incentives or whatever measures, but they will be oversubscribed.
And the chairman of the Capital Market Solicitors Association of Nigeria, Babatunde Ajibade, concluded the meeting by explaining the reasons for the evaluations.
If some of these initiatives that we're talking about, if they're going to really benefit us, and if we're going to optimize and get the best out of them, it is important that all the players, all the regulators, all the aspects of our economy are working in tandem. The FSRCC has been on our books for quite a while, but if it is working as it ought to be working now, then it's good for everybody. But I think it's a body that is extremely important, because some of the things that we're talking about, even the bill that is going through the House, obviously the incentives are not all going to involve, they're not going to involve just the exchange. They're going to involve taxes, they're going to involve various aspects of the economy, and everybody's not carried along with what we're trying to achieve. They're going to involve the petroleum sector, they're going to involve the NCC. It is important that all these things are harmonized and looked at as a whole so we achieve our objectives.